There are two things about Chicago finance you can't get anywhere else. The first is kind of hard to miss. Everyone's trading options. Cboe is on a 5-year growth streak making billions. And its goddess of grain sits atop the final pit of open outcry. And that's what it's all about. The chance to fend for yourself. A fortress for the self-made trader and the only still standing in America. The second thing you may not know, but it's worth trillions. Chicago is the only major city in America that's home to 2 of the top 10 registered investment advisors, according to Barron's. That means a steady river of passive money and fixed income pouring into the city. If you think you can beat the market, this is where you do it. If you've got value, price will discover you here in Chicago, the future of finance.
Good afternoon. Welcome to Chicago Future of Finance. I'm Oliver Renick. We are going into the closing bell here with an hour left. Stocks are under pressure. It's a pretty notable sell-off day. Yesterday I described the market as having a lot underneath the surface, even though it was flat from the bird's eye view. Now we're seeing a little bit of a breakdown. Few important things. Big Fed kind of shift in tone. That's number one. Number two is that you have some selling in semiconductors. Big one is the fact that crypto is leading the sell-off. MicroStrategy down big today. Bitcoin down less, but still crypto's getting just blasted. Ethereum down about 7% right now. Looking at the day and the trajectory of the market, it's been pretty ugly. The fact that we do just see kind of relentless selling from the overall trajectory, no real bid, just kind of slipping basically as we go throughout the day here. S&P 500 now is showing up with a pretty big red candle. Obviously, that's not good. Let's look at the S&P. Here it is. You can see the big drop today. That's not what you want to see after this kind of failed attempt to push above 68.55. Obviously, we saw some resistance there. That's a pretty big deal. Seeing the crypto market break down with MicroStrategy making new lows is also a very big deal. That's why my risk radar has been the way it has been, which is yellow on stocks, but red on BTC. Now, notably today, gold is also under some pressure, so you've lost some of that momentum as well. But this is the case in point for why I've had yellow on stocks, even though I've been eager to flip that light green. The fact that you have cryptos so soft, leading that kind of risk-off tone, the question was if it was going to hit stocks. I do think there is a little bit of fear around some of the macro story as well, which is that you've got now a potential for Fed maybe cooling off a little bit with the aggressive cuts. There was some commentary out from Susan Collins. Kashkari sounded a little bit more dovish, but generally the idea that you've got perhaps a pushback against some of the cut narrative is clearly not good. Look at Kalshi right now for the Fed decision in December. You can see that that's come off quite substantially. Now it's basically a coin flip. So it's kind of ironic that that's the case when we just had a period of substantial government shutdown. Now, my view is that the shutdown generally was the most bearish catalyst for the market. So the fact that we're now reopening and we got a deal done, but stocks are getting hit anyway, tells us that maybe there's just kind of a risk-off tone that's building here. I don't really think the Fed odds dropping here to a coin flip is necessarily correct. I think that the bias still generally is to dovishness, especially considering that you just went through a substantial period where people didn't get their checks. There's kind of this narrative that, we haven't seen the data, so we don't know what the data means. Looking over at Yahoo Finance, Susan Collins from the FOMC considered a centrist, expressed caution about further rate cuts given the lack of data. I don't get that logic. It seems to me that the logic would be the opposite, where if you're not getting the data and you had seen some softening in the economy, then you would think that the resumption of data would more likely bend towards the negative side. So the fact that people weren't getting paid is obviously an incremental negative. So I'm not really sure about that logic for the Fed cuts coming off. The other thing to just generally keep in mind is that inflation's been fairly steady here. Here's the chart for CPI. Obviously, some want to see this continue to push lower below 3%, but the fact that it's not really moving higher, sure, the last few readings have, but if you zoom out, it hasn't really moved too much, really, since the summer, really since mid last year. So that tells me that generally the Fed should still have a little bit of a cutting bias. Now, back to cryptos for a second, just because that's important, the fact that Bitcoin's getting hit. Suddenly, the odds of crypto making a big notable move going into next year have also dropped substantially. Look at the Kalshi odds for BTC and how low it'll go this year. So now 91,000 is the predominant forecast for 48% on Kalshi. Framed another way, will Bitcoin be above 200,000 by 2027? Here's another one from Kalshi that keeps on dropping. So you're seeing quite a bit of risk off in the cryptos, and that's obviously been a pretty major story. As far as volatility goes, the big point on volatility and options comes from Spot Gamma's analysis, which is what we've been looking at on that NVIDIA earnings report, which I think is a pretty big deal. Looking at the volatility dashboard, the term structure has this big pop right there on November 20th. That still means that NVIDIA could save the market, and I think is still the most important thing. So the fact that you have a lot of options built up, a lot of coagulation of speculation around that November 20th tells you that NVIDIA still could come back and play a major role in this. The other chart that I think is important here, which is the chip makers and semiconductors, is SMH obviously pulling back here to 340, potentially finding a little bit of support. This should be a level that you want to see support show up at, given the trading that happened right around here in October around the same level. NVIDIA getting blasted today, but still holding the higher lows. The other thing too is that we already got numbers from AMD, and that chart looks pretty solid. Keep in mind that AMD had a little bit of a pullback after earnings, but then came back to go above where it was before its report. So all that basically tells me that semiconductors can still come and support the market, but it might be a waiting game for a week or so. I got Noel Smith standing by, joining me from Convex Asset Management. Noel, how you doing, sir?
I've been doing better, but that could be worse, I guess.
Tell me about what you're seeing in the market here, because it looks like, depending on where you focus, you've got quite a different experience today. You know, the chips are kind of all right, but those are our real stalwarts, and they too are getting dragged. But really the worst experience is if you're in some of this high beta splashy stuff like the coins or maybe like a Tesla.
Yeah, you know, you did a really good job in your opening monologue.
Thanks.
You touched on a lot of the things that I would want to talk about. Insofar as anybody watching this will probably want to know, okay, why is the market down? And my shortest answer is I don't really know. This seems like an overreaction. 170 bips down in the S&P 500 seems like a pretty large reaction to, I guess the most notable news would be moving the ZQ futures, which is the percentage chance of a rate cut in December. They went from 62% yesterday to, like you said, a basic coin toss today. And to me, that's probably the most informative, and it's a destabilizing event for the marketplace. The market does not like when it has no idea what's going to happen with interest rates.
You're spot on there, and the fact that it pulled over pretty quick down to a coin flip for December, you know, I can see the argument both ways, Noel, but I just don't really get how the fact that we went through the longest shutdown in history in which people didn't get paid, you know, it seems like it would add a potential negative on if all else holds equal. So to see some of the commentary from Collins and others, I'm having trouble following their logic a little bit. Like if you thought cutting was necessary a month and a half ago, like I don't know why it wouldn't be more necessary or at least equal now.
Well, by that same logic, now that everything is back open, wouldn't there be a new release of liquidity? Wouldn't there be more stuff coming back into the market, more data to suppress vol? So I guess
Fair.
I'll take the other side of that trade. You know, if you think that a negative for the marketplace is that there is no data and there is no liquidity, the general account at the Treasury is going up because they're collecting receipts but not sending that money out. And if all of that inverts in the next week or two or three, I guess you would say something like a rally. But today was not the day.
Yeah. What do you see in volatility, Noel? What do you see in terms of options? You know, one of the things that we were talking about in the preceding week or so was that it did look like it might be a challenge to get through to 6,900 on the S&P. We tested it yesterday. We failed. Does it look like sort of a short-term natural gyration around resistance, or is there a potential real momentum that could build if people get squeezed out of positions or something?
Well, it's a high correlation day in the sense that everything that really matters is kind of down. With the exception of maybe oil. You've got gold down, you've got stocks down. Really, the only thing on my radar that's up is Lilly. And everything else is just pretty much down. It's just a sea of red. Berkshire, I guess, fine. But in terms of...
Good eyes on that, by the way. A little tease forward there. We're talking with Dave Mazza later on from Round Hill Investments. Their OZEM, their weight loss fund is doing great. And so Eli Lilly here kind of fits that perspective. I guess, secular trend, right? I guess it doesn't care about anything else that's going on.
Yeah, there's a lot of VIX options trading today, as probably is not that tough to imagine. A lot of the VIX out of the money calls in December. A lot of size, a lot of money out there. Not a lot of put selling out there. And also, if you look at the decomposition of the VIX, you see more of a fixed strike move down in the S&P 500, which is to say, I don't really read this as a get out of all your risk move. We came into today with a risk on posture, and I understand the market has changed since then, but we still have a risk on posture, and it's probably going to last through the balance of the day, which is only 52 minutes left. But like I said, vol is up across the board. Correlations are up across the board. Everything that's been going up has been going down. I can give you the list, but you kind of already gave it. But bonds not really doing their thing today. Energy, AI stuff, all down. So it's just kind of a beating today.
Yeah, it is a little bit of a beating. Noel, obviously there's a lot of options built up around the NVIDIA earnings. Tell me what you think that story is and what role that plays right now.
Well, earnings are on the 19th, so the options that are going to be tradable would be on the 20th. So as you correctly identified in your opening monologue, that's where a lot of the reservoir of volatility is going to be. Bottom line is if NVIDIA blows out for whatever reason, blows out to the down, that is, that's going to not help. Everything that's happening today, it's going to accelerate it. And it's going to be worse. That's probably pretty obvious. Until then, I don't understand really why you would have NVIDIA down, 4%, Q's down 2.25%. This seems like a really big move on not any really large catalyst, absent the ZQ futures, saying that really the marketplace has no idea what's going to happen with rates next month.
Okay. Do you think bonds play an important role right now? I mean, I guess that's the point with the Fed. The thing is they generally have been fairly range bound. There's been a little bit of back and forth for bonds. I haven't, found the chart to be particularly insightful from that perspective just yet because they've kind of been chopping. But any further, lower, looking at the ZN trend right now, if I take this line and kind of extend it out, I can still argue that we're kind of in this uptrend for bond prices. But, you stretch that back. I got a year to date for ZN futures here. I mean, it looks like they're still in an uptrend, but you think if this thing breaks, that becomes a story or what?
I think bond vol is more of a tell than bond price right now. If you look at either the move or maybe the VXTLT, you'll see a similar analog between the two. And bond vol has been bid for multiple days now. That's probably the biggest tell going into a day like today. I don't know if you want to try to pull up the the VXTLT or the move index. But both of those are pretty high, and also so is the VVIX. That's indicating that there is a lot of out of the money call purchases in VIX.
Okay, yeah, here's VVIX moving to 114. We're getting up into the range we were testing in October before the big move and the big sell-off where NVIDIA and others got blasted in October, but it doesn't look like we're quite there yet. That being said, this October 10th move, this candle I'm on right now, is kind of a bigger version of what we're getting today. And then we had a couple calm days in October before we really got blasted. I mean, keep in mind, though, that even with that sell-off, we did find support in the S&P 500. So it feels like right now we still kind of have to describe this as uptrend, but nobody likes to make lower highs, right? And that's what we just did for the S&P. We just made a lower high compared to late October.
Absolutely. Yeah, and if you look at it, there's all kinds of things that are kind of brewing out down below. Whenever you have a one-off, I don't know if it's a one-off day, but a day like this, so far it's one-off, right? Down 180 bips. And, almost on its lows right now. It's like you said, it's been one direction all day, just sell, sell, sell. It's got to kind of put everything on your radar in terms of what do you do tomorrow if we have a continuation of this. I don't think things have reached the threshold yet where you have to take all of your, your risk downs. But today, if you risk on, it's painful.
Yeah. Noel, what do you think's possible for volatility? I mean, thinking about where are the levels that would really pressure that could spike volatility? Where do you think we'd have to get in the S&P if we really, if we're going to break down, where would we have to get in the S&P 500 that would really hurt us?
That implies some kind of technical analysis that I don't really do, but I would say something south of 6,600, so down another 125 points, give or take. But, vols are kind of there now. We're looking at a VIX of 21. We're looking at a slightly backward term structure. You're looking at everything vol bid. Oil vol, well, gold vol. The gold vol is not bid today, but gold is kind of its own little thing. But all vols are really kind of saying, hey, look out, pay attention. So again, is it enough to breach your threshold? Depends on where you set your threshold. But in terms of, if this continues tomorrow, will this cause us to go into a risk off or risk neutral posture? Maybe. Pretty close.
Yeah, all right, we're getting there. Noel, like it, great stuff, good analysis. Appreciate you, sir.
Thanks, Oliver.
Thank you very much. All right, we'll be right back. We're going to let this market simmer for a moment. 1 minute, BRB.
And now I'm on the right one. And
Hey, Marc, you hear me?
I can.
Okay, great. Thanks, man. Coming back to you now.
With crazy, crazy feedback.
Yeah, okay. Any chance you could turn your phone sideways? You're the man. Thank you very much. Test, test, test. Okay, let's go.
Feedback is gone. Test 1, 2. I love Scotch.
Yo, Mr. Marc Lopresti, how you doing, sir?
Oliver, good to see you, my brother.
Hold on one sec. Yo, 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 Marc.
Oliver Renick, what's up, my
What's
brother?
up, man? Dealing with a little technical issue, Mr. Lopresti. Hey, what do you think about this sell-off, my dude? Thanks for jumping on. Appreciate you.
Yep. Oh, it's always a pleasure. Good to see you there on the Cboe floor. I'm coming to
Yeah.
you live from an undisclosed location in West Palm Beach, Florida. That's
Okay.
That's not a virtual backdrop. That's actual water behind me.
I love that.
But good to see action on the floor. Yeah, listen, I mean, the sell-off, it's accelerating a little bit into the close here. Combination of factors, I think, Oliver. Number one, now that the government shutdown is not top of mind, everybody's focusing in a little bit more on the valuations of the Mag 7 and the AI darlings. People, when they get a little scared, they sell what's up the most, so that's not surprising. But I think the bigger thing that's weighing on traders and investors' minds today is some of the commentary that we're getting out of some of the more hawkish Fed governors. And I think people are starting to realize that maybe Jay Powell meant it when he said at the last press conference at FOMC October that the December rate cut was not in the bag, quote unquote. And now we're seeing, based on, of course, you know, the Fed Watch tool that gets reported from our friends down there from where you are, showing essentially a coin toss, a 50-50 chance of that 25 basis point cut coming to us in December. That is not good news for the markets.
Yeah, we've been looking at it all day here, coin toss to your point. You know, the idea, Marc, that the kind of default should be to cut has kind of been my view. I think it's been the market's view in general. What do you see as the major case to not at this point? Because when I hear some of the language like from Susan Collins about, you know, we haven't seen the data, so we don't want to cut without seeing the data. I mean, what's the data going to show? That like we're really ramping up inflation after a bunch of people didn't get paid, federal government employees for 45 days? That seems like a bizarre logic to me.
It's totally bizarre logic, and it's irresponsible, and it's fiscally irresponsible for this country. Here's the bottom line. The data that the Fed is talking about, the BLS, the Bureau of Labor Statistics, that's compiled using the U.S. mail and printouts with number 2 pencils. I think they still have that. Remember the old computer paper you have to tear off on the sides from the 80s? This is not current data. It's not accurate data. The private data that the hedge fund managers look at, that traders like you and I look at, is far more accurate. And here's what it's telling us. We had that Challenger report that came out last week, Oliver, that was pretty horrendous in terms of the employment picture. It was over 150% year-over-year increase in cuts, 153% quarter-over-quarter increase in job opening reductions. A lot of that because of AI, some of it because of Trump's immigration policy. But the Fed's got absolutely no basis whatsoever to not give us a 25 basis point cut. And in fact, new freshman Fed Governor Mirren calling for 50 basis points. I think the odds of that are unfortunately about the same odds as me being crowned the King of England. So I
have to work on your accent.
That's not. Yeah, exactly. I have to work on my.
You do
British
have
accent a
some
little bit, yeah.
royal. You do have some royal-looking attire though, and suits. So
Yes.
you just got to get the crown.
Absolutely.
All right. Who needs England's weather when you're in West Palm Beach anyway? All right. So look, does the market really need it though, Mark? I mean, if Nvidia comes out and blows out numbers next week, we've been talking about all the options that are being traded around that event. It seems to me like that should still take priority over the macro stuff in my mind, unless there's a real awful piece of data that shows us the last month involved, huge amounts of layoffs or something. But we just haven't seen that many stories about it. A few, but it seems more like people are trying to travel all over and paying good ticket prices and getting stuck because they're trying to spend, but the government won't let them.
Yeah, listen, that's very true. I mean, a very wise financial advisor that I met with earlier today told me that, we talk about the impact of tariffs on consumer spending and what we might see from some of the consumer stocks. It's like 20% of the American population, the higher income earners that are responsible for 70% of the consumption in this country. They're going to keep on spending. They are spending. They're feeling rich and are, because if they've been in this stock market from the beginning of the year, if they were smart to buy the dip on Liberation Day, if they didn't listen to the far left news outlets causing panic selling on Liberation Day, they're feeling pretty good. Our portfolios, our clients' portfolios at Market Rebellion, they're all up big time. And look, at the end of the day, we did anticipate that we were going to see some pullbacks between now and an end of the year rally. And Oliver, again, whether it's the concerns about Fed jitters, whether it's CoreWeave's earnings, giving the naysayers and the AI and the Mag 7 darling lovers reason to say, look, I told you that these valuations are too damn high. We got to sell this off a little bit. I think when we've seen that kind of activity in the past few months in these pullbacks, what happens? We wind up making higher highs. The lows are higher and the highs are higher. And I think that's what we're going to see.
Let's do a little speculation here. Let's talk some crypto for a sec, Mark, while I got you. It's time for the gamble. Let's go into Kalshi and look at how things have changed pretty substantially here over just the last month alone. The fact that we now have Kalshi saying that Bitcoin is not going to go where a lot of people thought it was going to go. I think that is notable. It kind of hurts some of the sentiment. How low will Bitcoin go? It's basically 90,000 is the highest odds on Kalshi right now. Here's another one. Will Bitcoin be above 200K by 2027? That one's dropping. And then finally, will Trump create a national Bitcoin reserve this year? That one, to me, I think is kind of the jugular for those who are hoping that, the government embrace was going to actually lead to buyers and not just sellers of coins.
Yeah, listen, I can't really figure out what's really behind this significant sell-off in crypto. Bitcoin, Ethereum, of course, leading the pack. Even Tom Lee, who had a 300,000, I believe, target on Bitcoin by the end of the year, brought it back yesterday or so to around 150, if I'm not mistaken. That's still a lot higher than we are here. But here's the thing, Oliver. It's not about a federal Bitcoin reserve. It's not about what they say on Kalshi. And I know the prediction markets have become such a big part of measuring sentiment, and it's a good sentiment tool, but it's a small sample set. Bear that in mind. We have the balance of the passage of the Genius Act, okay? Remember what happened. We had the Clarity Act, we had the Genius Act, the two cornerstones of President Trump's pro-crypto legislation making their way through the House, making their way through the Senate. Clarity made it through, Genius made it through. Clarity did not because of the summer recess. And then when it was on the legislative calendar to pass, we wound up with the government shutdown. We do expect that vote will come before the end of the year. And I think when that does, it's going to unlock a lot of pent-up demand, especially if Bitcoin still remains at this 100K range level. It's looking pretty cheap here.
All right, fair enough. Maybe find some support at a big round number, right? You want to. There's also a pretty big line on the chart. The last one I'll bring up real quick is the fact that you've got this long-term uptrend. Here it is for BTC, kind of violating it right now. So, boy, you better hope they find some support there, or else maybe trouble in paradise a little bit. Mark, great to catch up. Thanks for hanging on to us while we figured out the Zoom. You're the man. Good stuff.
Always a pleasure, Oliver. Thanks for having me.
Thank you, sir. Marc Lopresti, CEO of Market Rebellion. We'll be right back for a profile of an ETF house that's gotten bigger and bigger, $10 billion now at Round Hill. We're going to talk with Dave Mazza next.
Are we clear?
All right, it's time for the Cboe Exchange Traded Profile, and today I'm joined by the one and only Mr. Dave Mazza of Round Hill Investments. Dave, thanks for coming on the show. Good to see you.
Hey, great to see you. Thanks for having me.
Absolutely. You know, we were got a little preview of one of your funds earlier on in the show because Noel Smith pointed out that Eli Lilly's been crushing it today, a standout winner in the group. You guys have been doing a lot as your funds have gotten. You guys are over $10 billion now across Round Hill's investments. But actually, I think the best performing one in the last couple months is OZEM, your Ozempic-themed weight loss. Let's knock that one out real quick as a major winner of the day. What do you think's going on with that?
Yeah, over the last 3 months, the healthcare sector has actually been the best performing sector in the S&P 500. That comes on the heels of healthcare actually having some of its worst returns in history over a rolling basis. And it's been frustrating. Healthcare was supposed to be defensive, and it wasn't really doing anything. But interestingly enough, OZEM and the weight loss stocks, actually under the radar, have actually been excellent performers. And so this is the fund I think most people associate us with some of our AI-related names and our income products. But this is a theme that I think still has some legs to it. There's been actually an increase in M&A activity, a bidding war for one of the companies in OZEM recently. Pfizer came out on the winning end of that. But you're absolutely right. As space, there's a lot of actually fundamental momentum on the earnings side that kind of make it a little bit more bullish than I think people realize.
You know, I kind of thought that the major, thematic sector kind of move right now was the semiconductors, the kind of secular, omitted from the macro, but I guess it's actually weight loss. I mean, we're looking at the chart right now, it's incredible. And it's, not just one or two players, there's obviously some big ones. I think that is an important part of this discussion though, is it's a pretty concentrated fund, I think, as far as the holdings go. I just pulled it up here right now. Eli Lilly at 18.5%, Novo at 14%. You got some others in the race here, but it is worth pointing out, I think, that about 30% of this comes from two companies.
Yeah, no. So one of the things that we try to do at Round Hill is when we're thinking about themes, particularly kind of nascent or emerging themes, is delivering exposure specifically to them, right? So it's about precision. So in this case, those are actually the only two companies that have direct revenue today from weight loss stocks. There's a lot of other names in the space with great drugs in the pipeline and being developed. But in this particular regard, they got a hefty overweight in the portfolio because of that. And so an investor looking at the space knows they're really getting this kind of cutting edge component of the broader healthcare trade.
Okay, so that's a secular move. It's a notable outperformer. Whenever the market comes under stress and you've got secular sector-based outperformance, it's always worth noting in my mind. I'm looking at your guys' list of funds here to kind of branch it out a little bit. I've talked MAGs for years. Obviously, that's your guys' big stalwart at $4 billion. You're going to obviously see MAGs reflect some of the nature of the semiconductor, the NVIDIA trade, of course. You got chat, too, with the AI secular theme up at $1 billion. And then your funds get into some of the income style of products, QDTE, covered call. You've also got WPay, which is, as I understand, one of the fastest growing funds. Tell me about what you guys are trying to do with this and how you stand out in such a very competitive market right now for options-based income strategies.
Yeah, so let's talk about kind of both of those funds, QDT and then WPay, because they're actually distinct in sort of their approach. So QDT is a covered call strategy focused on sort of on a daily basis selling zero DT options. So it's an incredibly active strategy, takes advantage of sort of some of the inefficiencies in that market, but it provides overnight exposure. So actually over the long run, most returns in the U.S. equity market, whether we're talking S&P, NASDAQ, Russell, what have you, happen in the overnight session. This year, that's actually been the opposite. So it's been a bit of a drag on returns, but it's interesting. This fund actually doesn't kind of cap your upside over a month or a quarter. It has that kind of daily trading ability, which we think is really exciting, and investors have too. The WPay fund is actually a fund, and what it does is combine our single stock weekly pay ETF into one trade. So an investor doesn't have to choose, do I think Robinhood is going to be an outperformer, Palantir is going to be an outperformer, Strategy, or Costco, which we have. You can get all of that wrapped into one. And so I think what we've seen is investors are still hungry for the potential for weekly income distributions. But what they're actually now beginning to look for is actually getting some diversification from that trade. And weekly pay, the structure is actually unique, where it has slight leverage, 120% amplified exposure on a weekly basis, coupled with those weekly distributions. So an investor can really kind of begin to express a bullish view on a name without one of the drawbacks of a covered call strategy where your upside is capped.
Got it. That's a really important part of it, right? Because a lot of people want, if they're going to be in some of this, hot secular themes or areas, they don't want to give that up, and that's obviously one of the main kind of drawbacks of selling options. Obviously, selling calls against a position. So that means that you get a little bit more swing too, which means obviously if the underlying goes down, you're going to be a little bit more tied to some of that as well, though.
Yeah, and I'm glad you actually pulled up this page, because we actually put this together.
Yeah, I love this, by the way. More places should do this.
Yeah, to understand sort of the pros and cons, right? Because every ETF manager or fund manager thinks what they're doing is great and the best, but the reality is there's pros and cons to anything in life. And so when someone's choosing a covered call strategy, they kind of need to know what the potential upside is and sort of what the drawbacks are. And yeah, in this case, you have amplified exposure. So in a down tape, you want this to not necessarily perform as well if it didn't have amplified exposure. But for someone looking to own this over the long run, get the benefits of diversification from right now 19 names in the portfolio, then you can still those weekly distributions. That might make a lot of sense to them, again, if they're ultimately bullish on the market.
Okay, got it. Now, in terms of the broad exposure versus the stock specifics and the sector specifics, like you've got the Palantir weekly one here, which is pretty high ranking. You've got the Bitcoin one in here too. Are you finding any, commonality or any signs from kind of how people or which assets people prefer to use this strategy on? Like, for example, like a Bitcoin. Part of me thinks that you're there specifically for the volatility. Why dampen it? But there's obviously different goals for every type of investor. So for me, these types of funds for something like a Bitcoin might be more like a advisor, someone who wants to dip their toe. How does that show up kind of on your end of who's buying these things?
Yeah, well, it's interesting. With Bitcoin, you could probably have 100 different flavors of exposure to Bitcoin, because it's such a emerging asset class that some investors are still under allocated to. And to your point, yeah, there's a kind of a wide spectrum of people who probably just want that underlying exposure, whether they're getting to an ETF or buying coins directly. But there is another group of investors who might still own Bitcoin, but also want to get some income off of that. But the drawback is you're going to kind of have a dampened return profile. But that's why I think investors are now really thinking about sort of breaking out the tool, as simple as it is. Kind of what price return expectation do you want to have? What income do you want or not? And then sort of what is the reflection of the total going to be from those two combined?
Okay. Now, when you watch the market and you see the way the market's behaving on some of this stuff, when we think about risks attached to it, I guess, one of the things that I've thought about, Dave, is which scenarios will these strategies kind of underperform at the most extreme? And one of them, I guess, would be vol down, price down. It stands out to me as kind of the only scenario in which you might go, oh, I'm not only am I losing the premium that I was hoping I'd be able to get, volatility subsiding, but the underlying's going down. But I just don't really see a scenario where that happens, right? I mean, like, MicroStrategy, Bitcoin, the price is going down, but the volatility is going up. So, I mean, I guess it's kind of a case in point scenario where you're going to outperform.
No, but like anything, and I'm glad you actually raised that, things like that can happen, right? Because typically, of course, when price is down, volatility is up, regardless of the asset class. But we earlier this year, actually, when there was sort of the market was just consistently trending higher, coupled with just zero volatility, that's also not necessarily great when you're selling volatility and trying to harvest from that. But net over the long run, that relationship to your point of the price is down, volatility up, or in some cases, price is up, volatility up, can happen more often.
Right, and that's kind of, I love that because there's multiple scenarios. There's 4, vol and price, which way they go, and I think you're good in 3 out of 4, essentially.
Yeah.
So those are pretty good odds. All right, so the weekly pay, popular, the income funds, they continue to remain popular. For the big tech, the mags in the chat, I guess we'll get an update next week on NVIDIA. I will say chart-wise, it kind of looks like chat broke down a little bit, but you got the big boy next week, so we'll find out, right?
Yeah. No, I think a lot's going to be, to your point with the earlier guest, a lot is hinging on that. There's really not a lot of catalysts, particularly now with the shutdown behind us, until we see what NVIDIA's got to say next week.
All right, here's the look there at chat, trying to hold on to $60, basically. Kind of looks like maybe some old support. We'll see if we can hold on to it. I think for everyone's sake, we hope that NVIDIA doesn't break down too hard. Dave Mazza, thank you, sir.
Thank you.
CEO, Roundhill Investments. Great stuff, always fun. Chat some ETFs, big tech alongside income as well. I got Scott Bauer joining us here as we go into the closing bell. Scott, CEO, Prosper Trading Academy. We talked some crypto yesterday, Scott. I mean, I think we kind of nailed it, is that it looked like the weakest link in the market, and that long-term uptrend line we were looking at that really needed to hold. Boy, it's not right now, Scott. I'm gonna pull it up. It's looking like it's breaking down here. Looking at BTC, tell me about it.
Yeah, look at that. What you have on the end of the chart there, right? And that's a pretty big break below there. We'll see if it kind of levels off here, but like we talked about yesterday, Oliver, that is a really, really strong trend line, and the fact that it is now below there, that is going to be a big hurdle for the bulls, to get behind and see if it can reclaim that 365-day moving average area. On a sell-off like we're seeing today, which is really a sell-off across the board, and it's not necessarily just agnostic to Bitcoin or crypto in general, maybe you can make an excuse that this is just because every risk asset is selling off, but I think that is a big concern there for the crypto space.
How about, so before we go away from that real quick, by the way, MicroStrategy down way more. I've never before been as obnoxious as I have been this year on this point.
You're allowed. You're allowed. You've hit it right.
Thank you. Because it just seems like it's a freebie. How often does the market give you a freebie? And here's what it is. You go long whatever risk asset you want. If it's stocks, if it's Bitcoin, as long as you are short MicroStrategy, which is the most extreme levered piece of risk we've ever seen in history, you can do whatever you want. You shouldn't be getting smoked in the market. All you got to do is have that hedge on.
you have hit the nail on the head. And my concern is, like we talked about yesterday, is if Bitcoin really is breaking down here, at what point does MicroStrategy, Michael Saylor, what point do they look at that and say, you know what, we've got to lighten up? I don't know what that point is. Is it 90,000, 80,000? Is it down to 60,000? Who knows? But if that time comes, there's not going to be any way to get out.
I'm looking at the master chart right now and trying to find, where the support would be. And I have to say that it kind of looks like we've already broke down past the 240 potential support. Why not test the 150 area? I don't think that this is immune from the double-digit type percentage drops that we've seen in crypto in the past. Now, will Bitcoin remain the outperformer in that scenario is the great question that I've been trying to figure out. Because if it starts to bounce back on BTC, then suddenly you've got a little bit of a vortex there that's gonna be a problem.
Yeah, there's no doubt about it. So I think we have to expect volatility one way or the other here. But your narrative of what you said, this is, the most correlated risk asset ever, maybe, that we have seen. That if you had been short master and just long anything else, you did well. And seriously, kudos to you, because you have been preaching to the choir about this literally for the last year. And the scenario is really playing out here. So again,
by the way, Chanos is out of it. By the way, Kinikos, he said that he's out of it, and he went on at the same time I talked about at JC Peret's All-Star Charts conference. So and Chanos said he got out of it, but when I saw that headline last week, I'm like, I don't know, man. I think it's got more to go. So I don't know. Maybe at this point, you try and play some kind of reversal, but the chart looks ugly.
Well, I think the problem is going to be if we do see a rally back in the equities for whatever reason, whether it's interest rate narrative or, the government shutdown is over and the latest and greatest reports come out that we haven't gotten and they're not as bad as, what people may think they are. If the equities rally back, but Bitcoin doesn't, that's a big issue.
Let's talk some Tesla maybe, Scott. That one's pretty nasty today after trying to break out to an all-time high. That's one where I think it's a Rorschach test, basically, for a technician. You look at this chart and you go, okay, beautiful. It was just literally yesterday fighting. It was
on the precipice.
On the precipice. And then it gets blasted today. I kind of tweeted out and I said, hey, why is this? And obviously there's a lot of Tesla haters, Elon haters. They do point out, though, that the Model Y did lose its spot, dropped like number 3 to 4 or something in the last year. They've been getting surpassed by BYD, by the RAV4. So I could kind of get that argument that things have slowed down, but I'm curious what your thoughts are.
I think, again, we're in this kind of point in time here where many of these stocks, I'm not going to say all of them, but many of these stocks that were just on the cusp of breaking out to new all-time highs, when we get into a climate with risk off like this, what's the easiest thing people can go to? Tesla is one of those, because of the massive amount of volume traded, because of the liquidity, because people getting those holding on to those longs from a couple $100 ago, which wasn't really that far ago. So, I'm not so concerned about Tesla yet. But if we break down further, you've got that big green candle right there. You're just on that big green candle there. And if we start to test that, and we're kind of at the top of it right now, there could be some trouble here. But when you really take apart the nuts, there you go.
Smack at 400, by the way.
Exactly, and it's it's funny that's one of those big psychological numbers, but there it is. But when you take apart Tesla and you talk about what you just talked about with the Y losing share, and maybe the technology is not right around the corner that Elon had hoped would come out in 25 and 26 with Robo and all of that, you know what? Maybe we are really a little overvalued here. But I'm not so concerned about Tesla to this sell-off yet. But if we start to get sub 400 and it can't pop through there, then again, that's going to be where I'm saying, all right, we're in this consolidation phase here. Maybe the next leg down from there is 340-ish or so.
I will say, to your point, if, on the one hand, I'm taking more Teslas every day via Uber. So, it's just they're getting more and more integrated. I do have a lot of faith that they will be a major player in the self-driving autos, which I have full faith that that's going to be a major industry. But I will say that if you are buying Tesla on the robotics in-home Android stuff, that to me is like a little crackpot at this point. I have a hard time buying that one. Seen too many movies. I don't think people are eager to put those guys in their home just yet. And I don't know. They're like doing the dances and stuff. Like, what do I really need it for? Self-driving car? Give it to me. The robot? Leave it in the warehouse.
I'm out. I'm out. No, I would agree. I would hope that's not why people are buying into this. I mean, that would be that almost to me is a little bit of FOMO and meme-ish almost, if you will. So I hope that was not part of it. Listen, if Tesla does rebound here and we get back to kind of where we were yesterday over the last several days and about to break out to new highs, it probably will. But it's struggling like the rest of the risk asset space here, where people have massive profits still in many of these stocks.
Yeah. Anything that stands out to you, Scott? Got about 1 minute here. Anything that we should be watching into Friday tomorrow that we haven't hit?
I'm actually surprised, Oliver, that we're not seeing vol higher.
Okay.
And when I was down on the floor earlier this morning, right behind you, I was in the pit and I was talking to a lot of the traders. They were saying the same thing. Why aren't we seeing the VIX at least at 25 even? Which to me that would kind of make sense with the narrative of what's going on right now. So I'll be honest, from the sense that I got on the trading floor over the last several days, there's not a lot of panic out there. There's liquidations going on, but there's not a lot of panic. I'm not seeing a ton of upside VIX pressure, VIX call buying like we saw a couple times when we saw a sell-off since April, since Liberation Day. We'll see if that plays out or not.
I'm on the weekly right now for VIX, and you're right. It just really does look pretty chill. So
it really is, and that's usually a pretty good leading indicator.
Yeah. All right, Scott. Thank you very much, sir. Great to have you, CEO of Prosper Trading Academy. You the man.
Thank you.
All right. We got to jump. That's it for us today. Thanks for tuning in to Chicago Future of Finance. I'll see you next week, Tuesday, 2 p.m.